Relative Strength Index RSI. The Relative Strength Index RSI for short is a technical curve that is gotten by calculating the ratio of rising points and falling points in a certain period. It is used to measure the speed and change of price movements. The RSI value ranges from 0 to 100 and the general calculation period is 14 days. The RSI value of 50 acts as a demarcation between the bull and bear markets. An RSI value that is greater than 80 for overbought territory increases the possibility of a price reversal, while an RSI value below 20 for oversold territory would increase the chances of rebounds in the market. When you look at the US dollar to Swiss franc 15-minute chart in May 2019, you would notice that as the RSI value broke through 80, the price had a pullback and then dropped down. However, on the US dollar to Japanese yen 15-minute chart in June 2019, when the RSI value dropped below 20, the price pulled back and then rose.
If you want to watch the full version of the video, you can go to TradingLive or download the TradingLive app. Share it to your friends and learn for free.